Now it's like, okay, the FOMO phase of whoever hasn't been into it is now moving in. Very similar to what we see over here. We actually, it's hard to see here because everything's squished down, but there was another FOMO move over here. There was another squeeze here where price blast past its 100% measured move of just people who aren't in it are being like, I can't take it anymore. I got to get in. Everybody's in but me. And so I feel like that's the phase we're in. I think we could tag that 3,000 or 350. And then I think we're going to get hit and see a bigger pause and pullback, which I've been talking about for a long time. I'm expecting to happen at some point this year. And then precious metals and miners are going to become a screaming buy for, 4,000, 5,000 gold and things like that. So
gold is hovering near record highs, continuing its rally as investors seek safety amid economic uncertainty. Factors like persistent inflation and changing Federal Reserve expectations are boosting its appeal as a safe haven. The bullish trend is highlighted by a key level at $2,942.78, with support at $2,739.81. However, gold may be entering a euphoric phase, where FOMO drives latecomers to invest, potentially foreshadowing a correction. This week, gold's strength has been further driven by escalating trade tensions after U.S. President Donald Trump signed an executive order targeting foreign nations' trade policies. The new policy introduces reciprocal tariffs on countries imposing taxes on U.S. imports, raising fears of a prolonged trade standoff. As a result, investors have turned to gold as a hedge against potential economic disruptions. ChrisVermeulen, chief market strategist at the Technical Traders, notes that gold has hit its 100% measured move, suggesting any rally beyond $3,050 could be overextended. He expects a 15 to 30% pullback, likely aligning with a broader market downturn, but views this as a strong buying opportunity, with long-term targets of $4,000 to $5,000. Gold's broader uptrend remains intact, driven by inflation concerns and trade war risks. Weaker retail sales have slightly reduced fears of aggressive Federal Reserve tightening, but the upcoming Personal Consumption Expenditures Index report will be critical in determining gold's next move. Gold may face resistance at current levels if inflation shows signs of cooling. However, persistent price pressures and ongoing trade-related uncertainty could provide a solid foundation for continued gains. The latest Kitco News Weekly Gold Survey reveals that while industry experts remain bullish on gold, market sentiment is becoming more divided. Retail traders have also moderated their expectations for further price gains, reflecting caution at these elevated levels. Make sure to tune in for our expert analysis. Don't miss out on future content. Hit the subscribe button and turn on notifications to stay in the loop. Your support is greatly appreciated.
I think there's a few things at play. When we look at gold, it's had a series of these rallies and pauses. We've had a move up and the pullback, and based on Fibonacci, we should be going up to about 3,056. 3,000, as you just mentioned, David, is a whole number. There's going to be a lot of people saying, if gold hits 3,000, I'm going to sell some of my position, lock in gains. There will be another camp that'll be like, hey, if it hits 3,000, I'm shorting the heck out of it. So naturally, 3,000, the first time you hit it is going to have a bunch of profit taking and probably some shorts trying to like pick a top. But based on the momentum, we're probably going to go up to somewhere around 30.50, 30.60, somewhere in there. And I think, Bitcoin has been lagging. It's been struggling. I think a lot of that, a lot of people say people who are into Bitcoin are also very same people or similar people to people who trade gold, right? And so gold has been leading the way. So maybe the gold has just been shinier right now. And everybody's like, you know what? Gold's making new highs. I'm going to own gold. And so maybe all the money that's usually going into Bitcoin is now people are like, yeah, I'm going into gold right now. And say when gold hits 3,000, we actually might see Bitcoin pick up speed because maybe people are going to move out of gold and move over to Bitcoin. I still like the Bitcoin chart. It looks like it wants to go higher. But right now, I think the Bitcoin money is actually going into gold. And I think we're going to see money slosh between those two maybe for the next couple of weeks. I think the rush is starting. I think this is part of it. You and I have talked about this in the past. Long story short, the long-term chart, the Fibonacci of this huge long chart pattern, we hit that 100% measured move a month and a half ago. And so now anything after this is really just icing on the cake. You can milk it if you're still in it. I do believe we're gonna have this squeeze up, and then eventually I think we're gonna have a sharper pullback. I do feel people are piling in. Everyone wants to talk about it. I was just on BNN this morning, and all they want to do is talk about gold, right? And I think this blow off phase, we hit this 100% measured move. So that move is done. Now it's like, okay, the FOMO phase of whoever hasn't been into it is now moving in. very similar to what we see over here. We actually, it's hard to see here because everything's squished down, but there was another FOMO move over here. There was another squeeze here where price blast past its 100% measured move of just people who aren't in it are being like, I can't take it anymore. I got to get in. Everybody's in but me. And so I feel like that's the phase we're in. I think we could tag that 3,000 or 350. And then I think we're going to get hit and see a bigger pause and pullback, which I've been talking about for a long time. I'm expecting to happen at some point this year. And then precious metals and miners are going to become a screaming buy for, 4,000, 5,000 gold and things like that. So generally what happens, you get this complacency or this FOMO move, this euphoric move where everybody finally says, I got to get into gold. It's one of the biggest gainers. It's leading the way. And they all kind of pile in. It's the way it works. The general masses seem to pile in right at the last minute. And you and I have shared this chart here of just the emotions of the traders. And that's the euphoric phase for gold. I believe we're in this like final squeeze. If you're not in it, you feel like you got to get in it. And then it's going to go into a correction along with the stock market. Gold will pull back and sell off with the market to some regard. How much? 15%, 30%? I don't know. We'll have to see how it unfolds. But I believe we're starting to get into this euphoric phase. And I think we're seeing money moving out of Bitcoin and into gold, which is telling us that aggressive traders are piling into gold to chase it higher. And that's, typically a contrarian sign that this trend is about to come to a bit of an end here.
As investor interest in gold continues to grow, gold miners have finally begun to outperform, delivering the expected gains relative to the metal itself. After lagging behind bullion's steady climb in 2024, mining stocks have started to play catch-up, benefiting from surging gold prices and renewed market enthusiasm. The sector received an additional boost mid-week as the latest earnings season commenced, with Barrick Gold, the world's second-largest gold miner, reporting better-than-expected Q4 adjusted earnings and unveiling a $1 billion stock buyback program. This news propelled Barrick's stock price over 6% higher on Wednesday, further fueling momentum in the sector. These broader precious metals mining industry continues to capitalize on strong profit margins, bolstered by gold's historic rally. With gold prices soaring to unprecedented levels, mining companies are enjoying increased revenue and investor confidence. Canada's largest gold producer is among the latest to report record growth for 2024, reinforcing the sector's strength amid a favorable macroeconomic backdrop. According to ChrisVermeulen, gold miners have quickly transformed from underperformers to market leaders due to a sharp rally driven by gold's rise and increased interest in metals. However, the rapid increase may lead to a potential cooling-off period. While the industry is poised for long-term growth, the speed of this rally suggests a possible short-term pullback before the next major move. Let's get back to the interview.
It's nice to see gold miners starting to outperform. I mean, they've been such an underperformer for so long. I think there's a lot of interest in the metal space right now. Gold's making continuous highs, and miners, they went from the bottom of my best asset now list. So they were one of the worst performing, like really just a month ago. And now they're at the top. Now the silver miners, gold miners, the ARK ETFs, they're all up there and money's piling into this space. I feel like it might be getting a little bit overdone. I think we're starting to see
I'll let you share your
miners
screen now if you want, yeah.
Sure. Yeah. I think gold miners are starting to run into some resistance. If we take a look at the charts, you can see it's been a very nice run to the upside for gold miners here. But we're starting to get some selling into this space, meaning, we've had this really nice run. We had a tight little bull flag here. Fibonacci extension puts us right up at 100% target right here. And that also happens to be where we saw the last kind of previous peak. So the fact that, gold's been holding up and moving higher, and we're seeing miners start to sell off a little bit here. We're getting this increased volatility is not a good sign. We're getting this, what is kind of like a running correction where it's gapping all over the place. And we're starting to get signs that we're about to probably see this have some type of pause or pullback. The fact that it's hit a measured move is not a bad thing. It just means we need to expect gold miners and silver miners to take a bit of a pause, build a little bull flag that we can create a new launch pad for it to go higher. And that's kind of where we're at. Gold miners are performing really well. Silver miners are struggling. They're not really participating that much and looking that good. But if I had to pick one, which I kind of have been talking about for a long time, I would pick physical gold itself because it's making new highs. It's not a stock stuck in the stock market. So if the market does start to pull back, gold miners, which are stuck in the market, are going to get pulled down with it because they're part of it. Gold is a commodity. It's outside of the space, and it's seen more as not just a speculative play, but more so as a safe haven where people around the world can buy and they don't have to worry about their money from selling positions in a bank for the bank going bankrupt or anything. So gold is like, get yourself out of the financial system, hold something that has, physical value, and that's out of reach for a lot of banks to, just vanish with it. So I think miners have had their run. Everybody's interested in them. They're at resistance. They've hit 100% measured move based on momentum should stall out here. If they have a nice bull flag pattern, if they trade sideways for a week or two and start to turn back up, they're going to probably be a really nice trade. They could do very, very well. But this leg of it is done. It needs a breather right now.
Gold's impressive rally has not only strengthened its role as a safe haven asset, but has also ignited a surge in mining stocks, signaling a shift in market dynamics. While long-term trends remain bullish, rapid gains often bring volatility, making strategic timing crucial for investors. As gold hovers near record highs, will the next phase be a sustained breakout or a temporary retracement before another leg up? Share your perspective in the comments section. If the video resonates with you, join our community by subscribing to our channel and enabling notifications with the bell icon. Thank you for being a part of our community.